All right, so Michael Burry, no stranger to controversy, tweeted out to start the year, inflation peaked, but it is not the last peak of this cycle. We're likely to see CPI lower, possibly negative in the second half of 2023, and the U.S. in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard. So this is pretty much what I have said. Maybe not to the same degree. Michael Burry tends to be very over the top, for lack of a better way of putting it. I mean, he's been very, very on the ball with some things, famously shorting the housing market in the early to mid 2000s. But he's also been way off on a lot of things. I mean, I don't know for sure, but he's been calling for crashes for I think basically a decade at this point. So, I mean, he's deleted his Twitter account over and over, and I mean, his name's Cassandra, which is a Greek god that nobody listened to, and clearly a little bit full of himself, in my opinion. But I think that he's spot on the ball, or he's right on here because the Fed is always behind the curve, right? I mean, if you look back during the 2020 2021 situation, they should not. I mean, this is something that was obvious to people paying attention at the time, so you can't really make the whole hindsight's 2020 argument on this one. But they should not have been stimulating to the degree that they've been stimulating. I think anyone that has any economic knowledge whatsoever could see that we are going to see very large inflation, right? So the Fed was wrong on that. They should have been raising rates sooner. They shouldn't have got so low to begin with, right? And I mean, if we had a free market, it would take care of all this stuff, at least not perfectly, but way better than the government, or I mean, it's not the government, but the Fed controlling things. So that's a point that's very important. But the rates should not have been so low. They should have been raising them sooner. And because of that, it caused them to overreact this time around, right? In that the rates went up at the fastest rates in a long time. I think it's been decades since they went up as much as they did in 2022. And that's going to cause problems because, again, raising rates that fast has a very large effect, right? So, and that comes back to the Fed will cut and the government will stimulate, right? In that they will do more damage than they intended because they've been acknowledging for the longest time that damage is being done, right? I think that's something that is obvious at this point. The real question is how much damage will be done, right? That is the real question. And I think that it's going to be too much, right? And again, this will be mid-recession, and the only way in their mind is to cut, right? And the government will stimulate, again, which will cause another inflation spike, right? So that is a really big problem, right? In that traditionally they could manage this stuff, right? It was easier to manage stuff. But the problem nowadays is that there is so much micromanagement going on amongst governments and amongst, the central bankers that they never get it right. Right. And people, there's a lot of people that probably think that, oh, well, yeah, we should have people centrally planning the economy. But the problem is that, well, number one, they're never held accountable when they mess up. And number two, no individual or group of people can know what the best interest rate is at any given time. No individual or group of people can know how much money should be in circulation at any given time, right? So that's the big problem here. But again, as far as what's going to happen in 2023, I think the first half of 2023 is probably going to be, I think that they're probably going to stop raising rates, whether it's in February or the next one. And like he says, and like I said, they're probably going to be lowering rates by the end of the year, right? And again, that very well could cause another bout of inflation. Will it be as bad as this time around? It depends how much they do, right? It really depends how much they do. But the one thing that is consistent amongst governments is they never spend less, right? They never spend less. And because of that, what was, again, like $1 trillion a year deficits were thought of as utterly crazy up until very recently, right? Up until maybe 2 or 3 years ago, even. Now it's the norm, right? The deficit now is, I think, in what, $2-3 trillion a year. It's into the, Canada, I think it's hundreds of billions, right? So, I mean, what the government says and what it ends up being oftentimes are different as well. So they're just going to keep running larger and larger deficits, right? So that's how they'll get around that. But again, what happens after that? Who knows, right? We probably see the stock market run. That'll be bullish for the stock market whenever they stimulate and cut rates, right? But what happens after that is unknown. And I think as far as the crypto space goes too, short of a very deep recession, I mean, how much more wrong can go wrong for crypto than what went wrong in 2022, right? I mean, like we had virtually everything that went that could possibly go wrong went wrong. So I mean, a lot of the proof of stake coins that have a CEO or a corporation running things, those coins are in the long run are going to go away, right? ETH may be the only exception to that, maybe Cardano, but any other coin than that, they're going away, right? 10, 20 years from now, they're going away. Bitcoin is the one that is going to stick around for sure. And then I think some of the privacy coins will stick around as well. But I think Bitcoin over time, there's going to be ways around that as well. So as far as predictions for the crypto space, um, I think it will probably be similar to the stock market, right? I think the first half of the year will be very shaky. I mean, for all we know, we could have another FTX situation, maybe not on that scale, but maybe it's another Celsius type situation or whatever. Maybe XRP blows up or like those kind of things are going to happen because they're essentially run and they're just taking time bombs at this point, right? And again, I don't know that for sure. Again, everything my opinion, but I don't know why anybody would want to at this point, seeing what we've seen, invest in a cryptocurrency that has a CEO or a corporation running things. Or I mean, you take something like an ETH, which has Vitalik and Joe Lubin and those kind of guys that are basically running things, right? So again, my opinion, I don't see why anyone would want to get involved with that stuff at this point. And on top of that, why you are not self-custodying your own coins, right? That's another big problem with the proof of stake coins is that they basically force you, especially ETH is one of the worst at this. Cardano at least allows you to hold your own private keys and stake. ETH at this point does, I mean, unless you have, what is it, like 30 ETH or I guess you join but I guess that isn't even holding your own keys. So ETH, it's virtually impossible for the average person to hold their own coins. But again, Bitcoin is the thing. And again, a lot of people have learned this lesson the hard way, right? A lot of people have learned this lesson the hard way. And I think that we are still in the very early stages of crypto, right? In the very early stages, because if you went out in public and asked people at random, would you rather have $100 or a Bitcoin or even 1 ETH or whatever, 10 ETH? I would venture to guess the majority of people would still take $100, right? So I think we're still early in crypto, although a very high rate environment probably limits crypto space's upside to some degree. Not because it should, because I mean, if you look at a lot of the stuff that has happened to Bitcoin, nothing fundamental has changed about Bitcoin. I mean, if people think that no sane person thinks that FTX collapsing is bearish for Bitcoin, it's bearish for the proof of stake coins and the coins that have CEOs and corporations running things, but it's not bearish for Bitcoin because nothing fundamental has changed, right? Nothing fundamental has changed about Bitcoin. So none of the things that have happened, in fact, I think it's bullish if anything, because any sane person looks at it and says, yeah, the monkey JPEGs are, yeah, they're really kind of a fad. the coins that have CEOs are getting lit up. The coins that have no real value. And now again, this is what a lot of the traditional guys will argue. Bitcoin is no real value, but it's like, I mean, Rolex watches have done very well over the last decade or two. Do they have any real value? Right. So at the end of the day, this stuff is subjective. I mean, trading cards, do they have any real value? No, but they've held their value pretty well. Again, a bit of a tangent. I just wanted to bring that up, but I think Michael Burry is very much right on here, right? In that, again, I just wanted to bring up what I think is going to happen with all the different spaces here. As far as the stock market goes, again, I think it's going to follow this basically perfectly, right? In that, again, the first half of the year is pretty choppy. We see another drawdown because if you look at these drawdowns traditionally, there's two drawdowns, right? So we probably see a new low in the stock market. That'll happen, I would say spring or summer, right? And then the Fed probably is cutting and the government is stimulating by the end of the year, which will be perceived of as bullish. Whether it is or not, I don't think it really matters, right? At the end of the day, all that matters is what people perceive and what the market perceives, right? And this is the same thing with the Bitcoin thing, is that people perceive FTX is collapsing as being bearish, therefore it goes down, right? So I think he's absolutely right here. Again, as far as traditional like stocks, ETFs, and stuff like that, I think that my philosophy and my outlook is still pretty well spot on, right? I think any dip in commodities, the recession is going to. I mean, the recession. We're talking about it like it's already. We know what's going to happen, but I think it's very, 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 very likely. If we get a big dip in these commodity stocks, I mean, in my mind, it's a very obvious buy. Obviously, my opinion, but the one good thing is, again, we are going to get some very good buying opportunities, I believe, in the first half of 2023, right? Again, unless we get the recession of a lifetime that takes years to get out of, that's always a possibility. But the most likely scenario is that we get a pretty good recession. The Fed realizes too late as usual that they were too much of a hardliner, and they end up reversing course, which again will be bullish. So I think that this stuff is the real question is how bad do things get before they reverse course and whatnot. That is the real question, and I think it'll be again. Probably like he says here, second half of 2023. But I think that's pretty easy to predict at this point. So, and the Fed is already hinting around at stopping raising rates after the February meeting, right? Possibly as soon as the February meeting. So, I think that this stuff is fairly easy to predict. The real question is just how bad do things get when they reverse course, or for them to reverse course. And just how high does inflation and whatnot go when they reverse course? And again, it'll probably take a good amount of time to see the remnants thereof, right? So we probably see another bout of this in 2024. And again, we may get this yo-yo effect that just keeps going back and forth that I think will be very hard for people to navigate, right? So what will happen, again, I would acknowledge nobody knows for sure. That's something that's very, very important to understand. No one knows for sure what's going to happen. But I think over the long run, you still got to be bullish, right? Over the next 10, 20 years, you still got to be bullish because the government will stop at nothing and the central bankers will stop at nothing for things to not go up over the long run, because that's the entire design of the system, right? That is the entire point. So anyway, that's what I wanted to bring up today. If you liked the video, hit that like and subscribe, and stay tuned for more.